bottom line is they're not going to be looking to cut until we see a massively nasty recession. They already are telling you their game plan that they're going to tolerate a low-level recession. If it turns into a really bad one, eventually they're going to be forced to do that. But think about where stocks are going to be. If we get in a bad recession, where are earnings going to be for 2023, 2024? And so, again, that means the stock market is going down. And I would dare say that without the Fed's printing of money, Bitcoin is still headed towards 12 to 13,000 and maybe as low as 9,000.
In today's video, Chief Market Strategist of InTheMoneyStocks.com Gareth Soloway tells us all about his latest analysis of the charts as well as his predictions and price targets for Bitcoin. Before listening to him, please ensure to smash the like button and subscribe to the channel.
Give us one example of a bet that you made in the last year that didn't work out the way that you anticipated, and explain the thought process as to, the thought process behind that trade or prediction and why it didn't go the way you expected.
Yeah, so and this is still something I struggle with today. And I think it's important to recognize is that no one ever, just because I'm considered a master trader or a pro trader, it doesn't mean that I'm not continually trying to hone my skills and learn. And one of my biggest faults in my trading, and this is something I'm always actively trying to remedy, is that I see the big picture, and I'm good at that. And you guys that watch my interviews, you know that I can tell you, okay, this is the likely outcome. Yes, the inflation was not going to be transitory. The markets are going to do likely this. And generally, I'm correct. My timing is something that I'm still working on as a trader. A good example of this was, I believe it was last year in early 2022, I was talking to you about how much I love China. I loved the China stocks. They were beaten up at the time. And the reality of it is the viewpoint of mine was that, yes, these things are going to rip higher. Eventually, the government will get off of their crackdown on these companies. What I didn't foresee is the lockdown of COVID, and that pushed the Chinese stocks lower. Now, granted, they've all ripped higher since then, but my goal as a pro trader is to get my timing better. And it's always something that's a work in progress, but you have to be able to see the big picture, but then figure out, okay, well, you don't want to be too early. And by the way, you see this with a lot of people, like a Peter Schiff or a Michael Burry. Like, they're telling you that these crashes are coming, and generally they're going to be right, but it's about timing it, right? If you're too early, the question is, can you stay liquid enough, or do you go broke before the play actually trades out? And the biggest thing to me, and this is something I've learned, and this is the most important thing I will say, is make sure you don't put all your eggs in one basket, especially with the price of eggs these days, right? You want to make sure that you allocate small amounts of money to different areas so that you do not kind of go boom or bust on one trade. So you can like the Chinese stocks and they could still go down. If you allocate a small percentage of your portfolio, it's not the end of the world. You want to be unemotional, analyze that chart, and go from there.
In that kind of scenario, though, would you, if you were to revisit that kind of trade again, would you hedge for unforeseeable geopolitical events?
Yeah, so the way I hedge, and that's a great question. I mean, so the way I hedge is honestly by limiting the amount that I'm putting in. So anytime you're investing, and this is something I did with the China trades as well, is that I'm investing a small percentage of the overall account, right? So that if that doesn't work out and it goes down, it's almost like you're hedging because you're still investing. Like, my biggest calls are gold and some of these other things, and we've started to see that really play out. And in fact, gold in 2022 was probably the best safe haven you could have been in, frankly. So I think the key is to hedge. For me, I'm not a big person of buying options to kind of offset the risk, because if I'm right 80 or 70% of the time, then all that does is take away from my gains by paying for that hedge. The way I hedge is I just invest the proper amount, and proper asset allocation is the number one thing for investors, along with discipline. And in fact, they go hand in hand together.
Well, tell us about the future now. Let's prognosticate together your long-term outlook for the markets. You mentioned to me that gold is likely to be the best performing asset this year relative to stocks and Bitcoin. Do you still hold that view, and why?
Yes, I do. I absolutely do. So I still think gold will be the best performer. Right now, Bitcoin's leading, obviously, since the start of the year. The S&P, I don't think quite is at this point, since gold's had a pretty remarkable move to the upside. But the bottom line is that you can't get away from the fact that the Fed is now keeping interest rates where they are. They're probably going to tighten a little bit more. But the bottom line is they're not going to be looking to cut until we see a massively nasty recession. So if we get in a little low-level recession, which is where I think we're going to go by second half of 2023, the Fed's not going to be rushing to the aid of the market because they remember it. And Powell has said this. He said that we're not going to repeat the mistakes of Volcker in the 80s. And what Volcker did was he cut rates too quickly and we saw inflation roar back. So you have to keep in mind, they already are telling you their game plan that they're going to tolerate a low-level recession. If it turns into a really bad one, eventually they're going to be forced to do that. But think about where stocks are going to be. If we get in a bad recession, where are earnings going to be for 2023, 2024? And so again, that means the stock market is going down. And obviously for me with Bitcoin, I'm looking at the long term. I love Bitcoin. I think it's got a huge future, but you still have some stuff that have to be sussed out here in Bitcoin, including regulation, including flushing out a lot of these hands. And again, one of the biggest issues with Bitcoin I have right now is that this run in Bitcoin has almost the same hype to me that Bitcoin had at 65,000. And that is really a concern. If you look at past bear markets that finally went bullish, the first 20, 30, 40% of a move in a stock or in a market, investors were extremely hesitant. They didn't believe it because they had been hammered so badly. That's not happening with Bitcoin, and that does concern me.
Well, the recent run-up we've seen since $16,000 is not as dramatic as the overall bull market in 2021, right? But how are you seeing parallels? Can you explain?
Yeah, so I think the biggest thing when you're looking at Bitcoin, right, and this is key, is that, number one, if you zoom out on the chart, and we can see my chart here, that this, again, it's a nice bounce, but you're still in a downtrend. You're still in an overall downtrend. And I think people have to be aware of that. In addition, you have to also remember that the Fed, this is the first bear cycle the Fed is not printing money. So the question I would say is, well, what does that mean for this cycle? Is it an elongated bear market because of that? And so these are the things that you want to pay attention to. Now, if you look here as well, in 2020 and 2018, we kind of had this same sort of almost rounded bottom like we did back, we just came out of, and you did have this run up, but then look at what happened to price. It came back and basically retested that $3,500 level. And I think that again is a good guidance level for what we're going to see here. And that would just be a retest. So you're looking at going back to 16,000 or so. All right. On the other side of the coin, the negative here and why I think it could go lower is that if you don't have money being printed and the stock market does decline by as much as 25% in 2023, like I'm predicting, where is Bitcoin? Where are other asset prices that are risk on assets like Bitcoin? And I would dare say that without the Fed's printing of money, Bitcoin is still headed towards 12 to 13,000 and maybe as low as 9,000. And that's been the way it has been since 2009, right? I mean, that's when QE started, and it really never stopped in a significant manner all the way through until now, because now we finally have inflation that is above 2%. And I think that's something investors have to remember. One of the biggest lessons, and this is another, we talked about lessons that I learned as a trader. In 2017, I was short the market. I was down on a lot of my shorts because I was trying to fight the Fed. And everyone kept saying, don't fight the Fed, don't fight the Fed. The Fed is telling you they're printing. That was the right move. All right. Now, all of a sudden, they're not printing and they're sucking money out. They're reducing their balance sheet. They say they're going to keep. Yet for some reason, everyone's like, oh, new bull market. Like everyone wants to fight the Fed. Yeah. That's part of our human psychology. We want upside in the market. We want to make market. We want to make money. But just keep in mind, if you weren't supposed to fight them on the way up, are we supposed to now fight them on the way down? I would say probably not.
What is Bitcoin and the rest of cryptos going to do in a bear stock market?
Right. And I think that's a great point. And it's not, and like you said, it's a bear market now induced by the Fed, where they're actually sucking out liquidity. And granted, the Fed will stop hiking. I think there's probably another 25 basis points, maybe two more of them. But the bottom line is that even when they go to not raising, they're not going to be going to cutting. And that's a concern because you're not going to see that flood of liquidity. And then if all of a sudden you have stocks taking another leg lower, that sucks more liquidity out. Remember, the asset markets are tied together. People that have crypto have stocks and vice versa. And fear and panic are they're the biggest human emotions, right? That fear is going to catalyze the downside move, I would say, in Bitcoin. And that's what I'm predicting. I do think that we still have more downside on Bitcoin, unfortunately.